Good afternoon, fellow apes. Hope everyone's having a glorious Friday. Out here in Toronto, Canada, it's beautiful, a lot of sun. I'm probably going to go for a run after this. But anyway, that's my boring life. Here's the macro snapshot of where BTC is in the current bull cycle. So the way I'm creating these zones, essentially, we have a lower bound over here within this bull run, which tapes out here around, just around 29,000, and our current high, which is 69,420 about, yeah. Okay, so anyway, this is the most important piece of my trading view. What I've done is created zones. So zone 1, zone 2, zone 3. Each one delineates points of inflection within our run. So you're going to see it clearly here. I made sure that it's a bit opaque so you could see the points where there's a inflection or a pivot in the price action. So right here is where we first entered zone 3. This is where the parabolic run began, and our first sell-off happened right here within zone 3, and you'll see there was 3 attempts at it 3 days in a row, a lot of larger wicks on the daily, and it sent it down. So essentially that's kind of our local top at that moment. Now as we came to retest it, the buying pressure was so crazy that we have this giant 20% candle that blasted through the zone. So at this moment we can't even define the zone because we've only had one interaction with it here, and then we blasted through on the second attempt. Anyway, that carried us above zone 2 before we could even define it, and then we get into this no man's land. So basically any of these gaps, this black space between each zone, these are like no man's land. This is where price chops between without any consequence. It's just basically, it's just stalling and making time for its next move. So we're above zone 2 here, and then we start to have a sell-off. Giant Soros candles come in on the daily, and you'll see our first test of zone 3 here. We bounce off the upper threshold. So this is starting to help us define our zone. Now, the giant wick delineates that there's a lot of demand on this demand line here, the upper threshold. So at this point, 43,000 people saw a lot of value in BTC because they saw on the top end it was 58,000. So you can make a pretty healthy return if it returned from here back to the local high. So people jumped in. That's an area of value. Anyway, we jump into zone 2, which at this moment is not defined yet, but you'll see we have a giant wick here. So now that's starting to define the zone. But then our next attempt, we blast through it, and we leave no man's land here into zone 1. So this is the top bound of our 3 zones, and we start to define it here. And then you'll see we entered no man's land. We then get rejected, so we have a lower high in zone 1, which sends the price action down again. This time around, what it does, it taps the lower bound of zone 2, and then the wick starts to build, showing that this could be an inflection point, and then boom, giant inverse Soros candle enter the picture, and then it sends the price up, and here we get rejected at the top lower bound of zone 1. So you see the way I define my zones, I look for that moment of inflection, and then that will define either the upper bound or the lower bound of each zone. Anyway, we do this, you can map this out all you like. It's very accurate. These are very defined zones, and the idea is once we find our natural floor, this is where people really start to accumulate in this region here, and then we reverse. And again, there was some patterns at play as well here, but I'll get into that in a moment. So as we break through all 3 zones on the way up again, we enter our local picture over here, where we finally blasted through zone 1 and created an all-time high, retested that zone, fell out, came back in. Lots of accumulation going on in this region over here by long-term wallet holders, and we eventually get our new all-time high. So we were essentially in price discovery over here. We closed the daily candle above our previous high, and you know, there's a bit of a sell-off going on right now, which was triggered by Evergrande and some other nonsense. So are we in the middle of what could be a leg down back into zone 2? That's the question on everyone's mind. Everyone's panicking that we could enter the 58,000 region, where I have an alert set here, which was our previous local low around there. So what I'm doing is setting up an alert just before the wick ends over here. That way I have kind of, you know, a preemptive alert set up. So if I have to sell any positions because I feel like we're going to hit the upper bound here, then because this decline from here to here is 8.5% basically, this would absolutely decimate alts. You know, this would definitely bring the alt price down by 3x, whatever you're at, whatever you're sitting on. So I have an alert set there. I'm not worried in this zone because I anticipate even if we don't, by the way, we're catching support at the upper bound. So this is like a really, really good signal that we're probably going to return back on course, which is, you know, higher high, higher low. And if you look at it from down here when we started our run up, that's what we've been doing, higher lows. So this would constitute another higher low if we end up bouncing up from here. So okay, that's the climate we're in right now. So what do I see? I'm not a traditional retail trader in the sense that I don't look for linear support resistance. I only use linear support resistance to create these zones, and that to me is the only function of linear support resistance. What I'm looking for as a precursor to price action, so I could see in advance where it's headed next, is macro harmonic patterns. The most powerful timeline, if you can identify them on, is the weekly. Basically, who I consider a mentor, who doesn't know I even exist, but Scott Carney, he's kind of like the godfather of New Age harmonics, and he's actually created a few patterns and rules himself. So he's very versed on these harmonic patterns, and he's who I turn to for all this. Essentially, he's been calling market tops, market bottoms, and changes in price structures using the weekly harmonic patterns dating back to 1998. And he's called majority of them 100% correct. Actually, he's called them all correct, just not the exact price reversal zones. So, I mean, dating back with that pinpoint accuracy to 1998 from his newsletter till now is really good. And he's been doing it on weekly time frames. You could do that, but even if we reduce it to the daily time frame here, I'm going to open up a couple of insights that I have. So let's see. Alright, so here I have a bearish butterfly pattern, and this is a macro pattern because it's on the daily. So all we're doing with this pattern essentially is we're taking the local top, which is around, this is kind of plotted wrong right there, and we're taking the local bottom. I think I plotted this on the 4 hour, which is why the measurement's a little off. I didn't take this scam wick over here just because, you know, it's definitely this is a liquidation event or a manipulated candle, and then using that, I'll adjust this. Sorry, there's some laggy thing going on right now while I'm recording, but okay, here's an approximate. It should be 1272. The way we plot this is essentially we take our local top to our local bottom. We eliminate these scam wicks because, you know, this is not an organic wick over here. So we take the local bottom with the breadth of the local bottom being a candle, and then we take our local high, our next local bottom on the move, and then we run up the D leg to where that pattern could print to. So there's two scenarios. If you look here, this is a bearish butterfly harmonic, and the way it is, essentially your X point is below the D, which is one rule right here, it should be either 1.27 or basically from the X to A, 127% is your retracement to the upside. So this move is 100% X to A. A to D is 120% of that move. And then on the high end, it could be as high as 1.618 to be a textbook bearish butterfly. And then what happens, there's a pattern reversal zone, and that's where the price action will reverse to the downside. Not necessarily reverse, but it will retrace. So if it's in a healthy bullish uptrend, that retracement will get eaten up anywhere between 382, so 38.2% retracement, up to 50%. And if it's an average retracement, it could go down as far as the 618 fib retracement. But anyway, we've established that this does qualify based on the ratios if we hit the 1271, and on the bottom end from A to C, we're within that range from 382 to the 886. We're kind of in the middle over here. So visually speaking, and based on the numbers, it looks like we're within a bearish butterfly. The alternative would be the 1618. So it's a higher D leg over here, which would end up taking us to 80,000. And we could in fact be within that harmonic as well. It all depends on where we reverse, right? So if we're in the previous harmonic, we will reverse here at 71.8. But if we're in the other more ambitious harmonic, we could reverse here at 80,000. Now, if we do reverse, what we need to do is look at where could we be reversing to. So I'll pull up the fib retracement here. All right. Now on the current move, we topped out over here with the giant wick, you see, and you know, we would expect, just based on basic Fibonacci areas of value, this, what I've highlighted in yellow, the 618, is the most commonly retraced to number. So you'll see it's actually very aligned with where we're catching bids on these wicks over here. If I just run this across, we're 100% at the 618. So this is the perfect area where a logical reversal could happen. Now it can continue to go down. You know, it could go to the 786. It could even go to the 886. If it hit the 886, then we're pretty bearish because we would fall out of my zone 1 over here. So zone 1, it's very important we keep the price action above or within zone 1. As long as we do that, we're still bullish. If we fall below it, we're at risk that we could fall below here and continue falling into this zone over here. And either way, we're in a bullish uptrend. You know, it's still higher lows, so I'm not too concerned. It would just take longer for us to hit our 80K Bitcoin target. But anyway, that's the local Fibonacci that I'm watching, and it 100% hit it and caught bids, so that's a really good sign. Let me get this out here. Alright, so now we're going to take the ambitious bearish butterfly. So if we're running off this projected top, local top for the bearish butterfly, where it takes us to the 1618, which is here at 80,000, which makes perfect sense to me. I feel like we're tracking to go to 80,000. This is just a common retracement like we had from here to here. We're having the same thing right here, just to give a little more steam and create another area of value and build new support, because you'll see our previous support was here. If we create the support where we are now, we're basically creating a nice bed of support right here in that 63 to 64,000 range, and that's super healthy because then we've essentially flipped our all-time high, which was previous resistance back here in April, and we've 100% flipped it into support, and that's going to be very important as the price action takes us to 80,000 and 100,000 on Bitcoin. So this is expected. Will it hit the D leg? If we break through here and then we break the 69,000 current local high, we're 100% tracking toward it. We could still reverse down here, but it's definitely on track. Then if we take a Fibonacci extension from the macro move, which was our previous local high here at X, down to our local low here at A, and then we drop our anchor on our expected D point where the bearish butterfly completes, this would be 0%. So what we're looking at on a reversal, if we continue to be in a bullish uptrend, this upper threshold at 50% where we're bouncing right now is the most likely, and we're probably going to catch a bid somewhere over there. So what I'm expecting to play out, if we end up hitting our potential reversal zone here on the D leg of this move at 80,000, what should happen if we take a fib extension from our X to A to D point, which is our macro move from the local high, local bottom to the local top, what I would expect is a potential reversal target to the 382 fib retracement here. So that's in this zone basically right here, which was our current local top, around 69,000 down to 66. And it would make sense. It would also be a higher high, and it would be it would be considered a continuation. So from here, this would be really healthy if we could hit this potential target and then reverse again. But that's assuming we continue to print toward the D leg, or even to the lower, the more shallower retrace to the upside for the butterfly. Regardless, this is the pattern that I'm tracking and the one that I think is in play. Again, it's a macro harmonic pattern on the daily, which is very important to point out, because any patterns you see on the 1 hour, 15, they're very low time frames and not nearly as powerful as high time frame patterns. The ultimate would be the weekly, but again, that's not what I'm tracking today. I'm tracking the daily. So expect a bounce here, which we're already currently having. 2 deep wicks. Yeah, this right here on the upper bound of our zone 1 indicates there's a lot of buying support and it's catching bids. So I would expect at this moment for it to continue tracking, and it can, it can come out of this zone anytime on the harmonic, but the point is it should track to here, the D point, and then that's where I think there's going to be people taking profits. The institutional investors, the hedge funds, the market makers, everyone, all the more sophisticated traders that use harmonics, they're typically going to take it over here, and the 1618 happens to be the highest profit taking level on a macro move. Anytime hedge funds and institutional traders, when they notice, they get an alert that triggers them, okay, we're at the 1618, it's time to sell off, collect profits, let it retrace, buy back in at a lower price. So I would imagine it's going to hit here and then bounce right back into this zone, 66 to 69. Let me know if you have any questions, and don't panic, don't sell your bags. If you've got good entries like we preach all the time with our team, then you're sitting pretty, Yeah, your wallet is going to be a little lighter today than it was yesterday, but it's a lot heavier than it was 3 weeks ago. And again, 3 weeks from now, it's going to be a lot heavier than today. So don't panic, relax, it's Friday, enjoy your weekend. See you later, apes.